So we're down about 230 here on the Dow. Let's get to Bob Pisani. Hey, Bob.
And that Carnival Cruise commentary, I think, very important overall. Two issues moving the market: the reopening trade and tariff in general. So let's take a look at the sectors here. And remember, when the reopening issue is not going as well as people had hoped, generally you get impact on energy stocks, bank stocks, industrials. That's exactly what we're seeing. Tech continues its relative outperformance and its absolute outperformance. And consumer discretionary, which moves a lot with tech because it's tech-oriented, also doing well here. So there you see the energy, banks, and industrials a bit on the weak side. So is the reopening story going well or not? Carl was referencing the trade and travel, the travel and leisure stocks here. So Carnival's down on the debt downgrade over there at S&P that we saw. Barclays downgrading the cruise lines. Inexplicably, they had it at overweight. I don't know why, but you see the impact there going on. Gottlieb was talking about the possibility that hospitals in Texas, California, Florida, Arizona might have to make decisions to suspend elective surgeries again. Obviously, that's having an impact on all of this. Another issue is trade and tariffs. Look at the S&P futures overnight. About 3:30, we had reports that there might be a whole nother little trade war on tariffs with the EU and the United States. That dropped Europe. Europe opened down about 2%. There you see us dropping on that news. It's been very wild overnight sessions recently in the futures overall. So now we're debating about gin and beer and olives and trucks and transports. So you can see some of these European stocks. All the car names were down, like Daimler and Volkswagen were down. Some of the aircraft companies that were down, like Safran, and the banks like BNP Paribas, all were down here. So this is taking a little longer than everybody thinks, and the trade and tariffs issue is another layer of distress on the markets that we're seeing. Still not affecting mega cap names. Guess what? Everybody's still positive on the big mega cap stocks, Apple, Amazon. Here they are, all positive, folks. The biggest stocks that are out there still moving the markets. And that's the most important thing to look at. The dispersion between sectors this year is truly remarkable. Normally, it's not unusual to get a 10 percentage point swing between the high sector and the low sector. This is the end of the first half of the year that we're dealing with. But these are pretty extraordinary dispersions here. So technology is up 14% for the year. Consumer discretionary, which has many tech stocks, essentially tech-oriented, are up. And look at everything else. Remember, the S&P is down about 4% for the year. This is for the year. So healthcare, even healthcare, relative outperformer, doing pretty well. But industrials down 15%, banks down 30%, and still showing no signs of bouncing. And that's the story for the first half of the year. It's tech that's winning out on the stay-at-home story, and everything else, healthcare doing okay as well, but everything else kind of struggling still if you look underneath the hood.